Welcome back, team. We're going to do something a little bit different today. Rather than doing any more chart reviews, let's do some education, okay? And I want to dive into a really underutilized indicator that's easy to use, can work really well for trigger points, really well for dynamic support and resistance, and fantastic for a target point for profit taking, okay? And that is the Anchored VWAP. Really underutilized, and it's so easy to use. It can add so much confluence to your trading, and you can add it into your trading strategy just like I do to help you understand where price action might want to go next. So let's hop into a chart now and we can start talking it through. What is VWAP? I like to think of it much like a moving average. So a simple moving average would place equal weight across the whole time frame that you're looking at. So if you're using a 13 SMA, it is placing equal weight on the last 13 candles within your time frame. Now, if you're using an exponential moving average, an EMA, and let's say again you're using the 13 EMA, that is placing slightly more weight on the most recent candles which have printed in your time frame. And the difference between that and the VWAP is, instead of placing preference or weight upon the most recent candles, what it does is it places weight across those candles which had the most volume in. Okay, so it's tracking volume for the day, and it's considered a fair price. It is the fair price because it's where most volume has been printed that day during the time frame. Okay, so if you're using a VWAP on a 1 hour, it might print differently to a VWAP on a daily. Especially you need to think about your opening and closing times on the time frame that you're looking at. So I'm going to give you an example on that on the ES, just so you can understand exactly what I'm talking about, and then you'll understand why the Anchored VWAP is so valuable, such an underutilized tool. Okay, so jumping down into a 5-minute time frame here, and I'm just going to show you the difference in how VWAP works, and then you're going to understand why using an anchor is so powerful. Okay, so let's look at this chart here. Here's a 5-minute chart, and this was of the price action on the Friday just gone. Okay, so we are in an extended hours chart here, which means it's showing all the prints of every single point that the ES was open. Okay, so it's not printing like a normal stock or a normal time frame. It's only having that gap that occurs between 5 and 6 o'clock New York time. So it opened at 6 o'clock New York time, and it's run until the whole close until we got to the weekend. Okay, and you can see VWAP, you can see the price action here. You can see here it held, let's call it 60, and it closes the day at around 69. Now, if I take extended hours off and I move it to regular trading hours, you will notice the difference. Okay, your VWAP changes. That's because it now has no price action, okay, in this space here to base its volume off. So now it's just basing volume off this print here at 9:30 in the morning. That's the opening print. So it's printing VWAP for this opening session. Now, I like to use this. Now look at this, the VWAP, the volume weighted average price for that day was 75 during regular trading hours. If you move it back to extended, it's 70. There's a 5-point difference there. And the reason for that 5-point difference is it's now not including the Asia and London session. So it's bearing zero weight at all to those two sessions, and it's solely focused on the New York session. So there's lots of ways around this where you can use an anchored VWAP, and you can include all 3 sessions. You can include news points, you can include breakouts, you can include so many variables which will help you understand where buyers and sellers are in the market. And this is where you'll find Anchored VWAP on TradingView. Okay, so jumping into the left hand side toolbar down here, it should be down here for you. Okay, and you want to come into this section here, forecasting and measuring tools. All right, and you will see volume based, there you go, Anchored VWAP. Now I've got it set to my favorite, so I like to use it consistently a lot. So for me, I like it on my favorite toolbar, and I can scroll down here and bring my favorite toolbar up so it's always sat right here, so I can access it really quickly. Okay, and that's all you need to do. Add it to your favorites if you think you're going to use this a lot. Otherwise, it will remain on that left side toolbar. So now let's show you how to use it. So the first thing I want you to understand is what the Anchored VWAP is. The clue's in the title, right? It's exactly the same as the VWAP, except it lets you pick an anchor point, all right? It lets you pinpoint a time which that VWAP will start from, all right? So it's not based on the open and close of the session, okay? It's based on when you decide, and that there is the key bit of information. So it allows you to be super flexible when you decide to pinpoint where you think sellers might be in the market or where you think buyers might be in the market, and then it would give you the average price during those sessions. So let's give you some examples of some points that I like to look at from a higher time frame, and then I'll give you some examples on a lower time frame and how I use all of those things together for Confluence. Okay, so starting on a higher time frame. So the first time frame I want to look at is a daily time frame. Okay, now let's just zoom out here and let's just have a think about how we can use these. Okay, so on a daily time frame, what are some obvious points that we would always be interested in for a daily time frame? They would be swing points, right? The same with everything. They would be structural swing points. So you would have seen, if you've watched any of my other videos, where these VWAPs lie for me. So we click on the Anchored VWAP and we select our pinpoint. So for me, the first thing I'm interested in, that COVID low, all right? We know lots of buyers stepped in the market then, and we had this huge rally. So I'm gonna go to this COVID low and put an Anchored VWAP in, okay? Another point we can look at was the pre-COVID high. This was the high that caused this massive flush down, and then we retook this high for a change of character and that drive up. So we can put the COVID high in, and what do you know? Same point. So we now know everyone who sold in here became dip buyers from this point here, and this is their average price. So anyone who's been in the market from that pre-COVID high and that COVID low has been holding this price. Their average price now is somewhere between 39.67 and 39.20. So it gives us a good point of reference, all right? What are some other prices we can look at? We can look at the all-time high. That is another price I'm interested in. So I dropped this in there. What do you know? We came right down to it the other day. So I'm going to change the colors of these, okay? Because I need to be able to recognize the difference. So the all-time high, or should we do that? We'll do that one, a yellow one for now, okay? And now we can also look at some of these pivots. So we know that buyers stepped into the market here. We had this huge downtrend, and this was the low that broke us out, okay, of this move in the drive higher. So we can also potentially look at that low. All right, buyers step back into the market here. What do you know? That low is now lining up with this high. So now we know that we had sellers in the market here, buyers in the market here, and they are now priced at the same level. So what does that mean? The buyers that stepped in here are still comfortable. Any seller that came in here and has not sold is underwater. You could also read that as anyone who continued to buy this whole move down is now in the same position, same average position as the buyers, right? It's giving us some nice ideas of where price might want to gravitate to. Now, I've had these in my system the whole time, okay, the whole time before this whole move. So this is not something I'm just putting in now. If you've watched any of my videos, you would know, even last week I talked about us drawing towards these levels, okay, drawing into them. We can also put in recent points, all right? So we can do this local high, right, which we failed from, we can put that in, and I'm going to do that as red. Why am I doing it that as red? Because it is a sell point, all right? We sold from here. That's just how I personally like to do it, all right? I like blues and greens for my buy points, and I like reds for my sell points, and yellows as well, ones that are slightly less important because we've now turned it, that's why. So look just from here, and we're not even going to get into the smaller time frames. Just look what we've done here on a daily. We traded down, all right, used this as an over-under. It's quite clearly a clear level, and then we stuffed against it. We came back into it, we stuffed against it, we failed. We got the break of structure for the leg down, but we held these. What were these? It was the all-time high, okay, and the most recent low, this October 22 low. We held those, and what have we done? We've driven on a daily time frame back into the daily bearish or the daily sell signal VWAP. Now, I'm not saying to use these solely alone. I am never saying to do that. Just because we come into a VWAP does not mean it's a buy signal. Just because we're coming into here does not mean it's a sell signal, okay? But what it can do is it can add confluence, okay? So I'm instantly looking at, here is a supply block, okay? Big supply block. It made sense for us to come back into here. This was an obvious place for us to come to. We're doing a pretty much 100% move because we've broken out the golden zone, right? So we've driven in to that anchored VWAP. And what happened in that anchored VWAP? You can see we tapped it and we pulled back. So good area of confluence. How can we use it on lower time frames? That's the next thing I want to go into. How do we use it on lower time frames? So I'm going to drop down to a 5-minute chart now. And this week has been a great week to use it for. Right? I like to use lower time frame anchored VWAPs all around news points, big news points, big volume triggers, anytime we have a big breakout, and that can be bullish or bearish. So the first one, and if you watched my video last night, you already know what I'm going to say. The first one I looked at yesterday was the NFP candle. Okay, this is it right here. Non-farm payrolls, huge move, 8:30. Now, one thing I just want to point out yet again, okay, this green line is your normal VWAP, your normal VWAP that you'd have on for the session. So this VWAP has included the NFP candle, but it has also included all the price action that had occurred during London and Asia session, all right? But it's also going to include the NFP. Now, if you had this off and you were looking at regular trading hours, you would not have included the volume which occurred in that huge spike on NFP, and see how your VWAP wouldn't have been as useful, you would say. We danced over and under it. We did finish back on the range though, I will say that. But let's go back. We're going to go back to extended hours, or electronic hours, and I'm just going to take that VWAP off, all right, and I'm also going to take this supply block off that we just marked in now. So area of interest, what did I say? I like news, I like anytime big volume comes in, I like breakouts. I don't really do it myself, but some people will do anchors to things like moving average crossovers, all right, when there's a big moving average crossover, normally on a higher time frame. So say you get your 5-day cross below your 50, or maybe you get your 20-day cross above the 200, and you get volume come in. That'd be an interesting point. I don't use it for that personally, but I know it works well, all right? It's just not how I trade. So going back, click on your anchored VWAP. I've dialed right down here into a 1 minute so I can try and be accurate with it. And let's go to the bottom of the candle. Bang, all right? There is my anchored VWAP for Friday's session based on the NFP, all right? So once the volume came in, we've held it, all right? And now I'm just going to show you again. It is different to the VWAP. It is different, all right? So price was being held up by it straight after. Look at this. Dips back in, push up, did the dance, broke below your anchored VWAP, held VWAP, broke back above the anchored, used it to trap shorts, extended off, came back into it end of day. So easy, right? So easy to use when you understand it. So let's go back further. We had a lot of news this week, all right? What else do we have? We had FOMC news on Wednesday. We had Apple earnings. If you were trading stocks, you could have used it for Thursday. So let's try and get into the FOMC. Okay, so here is a good example. This was chop during the FOMC meeting, right? And we all know it starts to get a little bit wild and it starts to get a bit thin as the algos start looking for keywords normally that he's saying, and then they're going to trade the market up and down and chop everyone out. All right, again, going to take VWAP off, going to go to my anchor point, just close that up, and we can go from this low. Again, beautiful. Look how price extended off the low that it created, okay? Why am I going off that low? This was the low created while Jerome Powell was talking. It is also the low that broke out. It caused that breakout. And once we got above it, price held. Okay, price held above it. Can zoom out a little bit here. And we had that extension off. So you could probably do one as you move through. You could probably do one off the hold of this. Again, all right, so once it came back and retested, more buyers might have stepped in there. Look at it just holding price up. It just makes life so much easier, especially, right, if you're the type of trader who's constantly counter trend and getting stuck. This is going to stop you doing that. It's going to just make you understand buyers are in total control of this market. All right, so there's a good example of when you can do it. You can also do it on your stuff candles. Of course, you can do it on the big sell candles, just like we did on the higher time frame. You could do it on that. So like even on a lower time frame, let's say you were interested in this sell here because you see this. Let's just zoom in a bit. You see this microstructure of the head and shoulder, all right? So you're like, okay, well, let's just see. It holds price down. Look, you can see retrace in stuff, retrace in stuff, retrace in stuff, retrace in stuff, break above, pull under. This is telling you, get out now, please. Get out of your short now, please. Like, you're not in control anymore. It's helping you understand. Now, again, normally I would do those as red or pink intraday. But you can use them to your advantage. It's going to let you know. For this point, intraday, sellers were definitely in control. So from 45, you got a sell signal. You got an ad at 38. You got more sell. You could have got your covers off down here at 24. You got another sell signal. And then it started to hold price at the bottom. And this was your out. It gave you a good signal. From 44, you could have got movement realistically down to 22. You got 22 points. That is some decent range, even with one contract on. That's $1,100 with one contract, right? Just using this as an area of confluence. Now, again, I'm going to reiterate, I am not saying you use it by itself. Here is a nice bit of confluence because you have your shoulder, you have your head, you have another shoulder, you have a change of character. Okay, you have a nice bear flag with a pullback in and it gets stuck on the anchor and then the flush. All right, so this is what I mean about using it as part of your strategy. This is just how I trade, right? There's a million ways to trade and I don't care what anyone says. There are no rights and wrongs, all right? There's no, this strategy is how you do it, and this strategy doesn't work. You can flip a coin, all right? And if you've got the right risk reward, you will eventually come out on top. That's what trading is. It is about controlling your risk, understanding that you need more reward than you're willing to risk, and trying to find your edge. This, for me, is part of my edge. This is how I use it, okay? So I'm gonna give you more and more examples how I use it as confluence now. Okay, so we're going to dig into how I use it for confluence, how it can start to enforce my ideas of my weekly model, where I think buyers are trapped or sellers are trapped, and vice versa, where I think we're going to get big momentum. So on a 1 hour chart here, okay, on a 1 hour chart, again, clicking here, and I'm going to look at these trigger points, right? So we had this stuff off this anchored VWAP. So I would have put this in originally. I had this in my chart until this week, and I pulled it out. Why? Because we ripped through it. Okay, so let's just do these as oranges, all right? And we could have done another one here. And quite a nice one here. And we had one down here. Okay, so these are all failure points. This is where on the move down on an hourly, we've pulled back in and stuffed. And we've pulled back in and we've stuffed. And we pull back in and stuff. Okay, so what do we know? We know on this leg down, shorts are absolutely in control. Okay, we can all agree that. But we also know that we've come into higher time frame anchors. Remember, these are daily anchors going back over a year, some of these 2-3 years. So these shorts, if you were short in the market, where was this? 65, okay? And you rode it down and you didn't cover. Once it got to 41.82, everyone who was piling in short down here was now flat, break even. based on VWAPs, right? Based on volume weighted average price. You could even do another one here, all right? And you could do another one here, right? These guys are the late shorts seriously in pain. Okay, remember, these are bearish anchor points. These are bearish anchor points, just off pivots moving down. They're not based on news. They're not based on anything else. These are just based on pivots that I see. So we can all agree, anyone who is short at this point here is in big pain. Anyone who is short in this point here, who averaged down and was looking to size in for a bigger flush, as of the break of 41.80, was in pain. Anyone who was short at 43.41 and again averaged into these movements down based on VWAPs was in pain on the break of 42.23. So we knew that. We talked all week. Anyone in here who was short was in max pain, right? They were in max pain. We already knew that. We knew that when we have a break of structure, after the break of structure, we are looking for a pullback leg, higher time frame. So anyone under there, they were in pain. What does that mean? That means you're going to get a squeeze, okay? You're going to get a squeeze. So this was a good way of identifying if shorts are trapped, okay? If shorts are trapped and short volume is trapped, then what are we going to do? We're going to move up. So use their pain as areas of confluence once we start getting a change of character, break of structure, continuation. You can use these old bearish anchored VWAPs as target points. So if you were long in here at 41.58, you could have targeted some of these for potential sells for TPs and eventually targeted the higher time frame ones, okay? So those are other ways that I use them for areas of confluence. How else can I use them? Of course, right now, you have the opportunity to do a new anchor, all right? Where would that new anchor be? You have one from this pivot low. And as you can see, drove up, pulled in, held, drove up, pulled in, held, bullish. So with these, on top of the bearish anchors, which I just got rid of, you knew we were bullish. Okay, so how do I tie everything together and look for these confluence? So I'm going to zoom in here. Let's go for a 15-minute chart. All right. So I use, anyone who watches me, I use supply and demand. I use structure. Okay. I use anchors and I use my flow zones. That's how I trade. My flow zones are EMAs and I use it with IB levels. So I know if we're in a trending market or we're in a rotating market. Okay. So straight away, let's say we put this anchor in here. Okay. And we're aware that we think the market wants to move up. What am I instantly aware of? Okay, I'm instantly see this liquidity that we built here on the left. And then I see this liquidity we've built here. So if we don't get a break of structure to the downside, what can I start to assume? I can start to assume that we're going to use this liquidity to use it as our trigger to get long. So anything above here, all right, which is effectively the neckline, would be our trigger long. And look, we build the shoulder, we build the inverse head and shoulder for that breakout. So then we have these dips back into the anchored VWAP. When I talk about how we can use it, there is a flag, okay? Nice flag. On top of that, what can we think about? We can think about the pullback leg that occurs before. So we can mark out this pullback leg as a potential order block, okay? Potential level of demand. So if that pullback leg is where buyers were getting in, we could also think about a fib in here. Can we get to discount? Okay, 50%. Look at that. It's pretty much in line with the anchor. So it's giving you reasons to buy. And that's how I like to think about things. How many reasons have I got stacking up to get long or short into a market? Or how many reasons have I got stacking up to take some money off the table? All right, so if we had an anchored VWAP in here and I know that we've got liquidity sat above and I know that maybe here is a level of supply, okay, that is a good reason that if I got long on here, maybe I'm going to sell a contract there. Okay, that's how I use it. You've got to think about your strategy. Your strategy might be different to my strategy. Now, I obviously teach a strategy on this channel. I try and teach my strategy to help traders improve, but that doesn't mean you have to do the same. You might have a strategy which works for you. You might be an SMC trader. You might be a trader who just plays swings. Maybe you're a trader that plays EMA crossovers. That's absolutely fine. Okay, you don't need to tear up your whole handbook. All I'm saying is this is an underutilized indicator which is very specific to price and volume, which can help you find areas of confluence to get in and out of the market. So there you have it, the Anchored VWAP and how it can help you. I hope this has been a really helpful video and you can start implementing it into your trading strategy starting this week. You know what though? You can do me a massive favor and you can like and subscribe to this channel and tag a friend underneath in the comments that you think this might help. If there are any other subjects within the trading hemisphere that you'd like me to look at, drop a little note in the comments, let me know how I can help you get better as a trader. Until next time, trade safe.